Lithium Americas stock is changing hands at $3.25 per share, showing a minor intraday tick of plus 0.6% as the broader market digests the raw financial reality of building a massive domestic supply chain from scratch. When you look at the headline figures on your screen, it is easy to assume that a company sitting on the largest known lithium deposit in the country must be cruising on Easy Street. But the intraday trading volumes and recent price action tell a story defined by heavy capital burn and the grinding patience required to build industrial infrastructure. People often think that owning a massive resource automatically translates to immediate stock market dominance, but the reality on the ground involves years of permitting hurdles, massive capital expenditure requirements, and a volatile commodity pricing environment that tests the nerves of even the most seasoned market participants. If you look at how retail and institutional investors approach this space, many utilize platforms like Robinhood or interactive brokers to capture short-term swings, while others prefer the broader asset access provided by Schwab Intelligent Portfolios or a dedicated Fidelity brokerage account to manage long-term commodity exposure without getting chewed up by single-stock volatility. The general consensus among casual observers is that government backing and massive corporate partnerships guarantee smooth sailing for any firm attempting to secure domestic critical minerals. General Motors stepped up with a monumental multi-million-dollar commitment, and the Department of Energy structured massive loan agreements to accelerate construction at the Thacker Pass site in northern Nevada, creating a narrative that the financing puzzle is completely solved. However, when you look past the press releases and examine the quarterly cash flows, the reality is that constructing a project of this magnitude requires continuous capital injections and a high tolerance of dilution before a single pound of commercial-grade lithium carbonate can be sold for a profit. While platforms like SoFi Invest or various online investing portals make it frictionless for retail participants to buy fractional shares of Lithium Americas stock, the day-to-day market action is dictated by institutional positioning, macroeconomic sentiment surrounding electric vehicle adoption rates, and the broader trajectory of global commodity prices. To understand why the stock behaves the way it does, we have to look closely at the daily trading patterns, volume spikes, and how the market reacts to every minor shift in government policy or partner strategy. Daily trading volumes regularly fluctuate as short-term traders try to capitalize on sentiment shifts between green energy optimism and raw material supply gluts. When commodity prices dip globally, the stock frequently faces disproportionate selling pressure, regardless of the long-term strategic importance of domestic extraction. Investors who manage their assets through individual brokerage accounts or specialized platforms like interactive brokers often watch these swings closely, recognizing that mining development is inherently cyclical and capital-intensive. Meanwhile, those who prefer a more hands-off approach might look toward diversified options or automated tools like a SoFi robo-advisor or Fidelity mutual funds to gain indirect exposure to the clean energy transition without taking on the direct single-stock risk associated with pre-revenue mining corporations. Comment below how many shares of Lithium Americas stock you currently hold in your portfolio. The core of the business model rests entirely on the development and future operation of the Thacker Pass project in Humboldt County, Nevada. Unlike traditional tech companies that can scale software overnight, or consumer brands that rely on rapid manufacturing turnaround, mining development is a slow, methodical process of earth-moving, engineering validation, and environmental compliance. The company operates its Lithium Technical Development Center in Reno, Nevada, where engineers continuously refine processing methods to ensure they can produce battery-quality material efficiently and at scale. Historical performance metrics show a company that has undergone significant corporate restructuring, including the separation of its North American assets from its former South American operations, leaving this current iteration laser-focused on domestic U.S. supply chains. Because the company does not yet generate steady commercial revenue from production, its financial statements reflect continuous operational losses driven by heavy engineering, construction, and administrative costs. This fundamental reality often catches novice retail investors off guard, who enter the stock expecting immediate earnings reports comparable to established tech giants or mature industrial firms found in typical Fidelity ETFs or standard index funds. Looking ahead toward the future outlook, the primary catalyst remains the scheduled transition from construction to active production at Thacker Pass, which aims to position the company as a cornerstone supplier for domestic automotive manufacturing. If the execution stays on schedule and global demand for electric vehicles rebounds past current market bottlenecks, the reality of active commercial output could finally match or exceed the high expectations set by early-stage investors. On the flip side, major risks include potential construction delays, unexpected regulatory hurdles, or a prolonged slump in global lithium pricing that could pressure margins before full-scale operations become self-sustaining. Whether you are executing trades through a streamlined app like the Robinhood app, managing a diverse portfolio via Fidelity Wealth Management, or analyzing risk parameters through an advanced interactive brokers platform, understanding the deep gap between market hype and operational execution remains essential for navigating this volatile sector. In summary, while the long-term narrative of domestic resource security is compelling, the immediate reality for Lithium Americas stock is a high-stakes waiting game defined by heavy capital requirements, construction milestones, and the relentless pressure to turn geological potential into tangible, revenue-generating reality.